Bitcoin has seen a strong move from $26,000 all the way up to $27,000, bouncing from the major horizontal support sitting between 26 and 25.8. This move is not insignificant and has the potential to develop into a higher timeframe bullish reversal if the debt ceiling announcement comes out in favor of the markets. In today's video, we're going to be discussing the current price action on the smaller time frame and higher time frame, and also discussing what impact the debt ceiling is going to have on the markets, what the result could be, and of course, what we expect. Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you so much for tuning in to today's video. I hope you're all having a fantastic day. In today's video, we're going to be talking about the short-term price action, discussing exactly what we need to see for a breakdown toward 25.2k or a reversal and bounce toward 30,000. Bitcoin is currently retesting and consolidating within a neutral horizontal range. We saw deviation below toward 25.2, followed by quite a strong bounce in the last 24 hours, resulting in a move back into this horizontal range. Alongside that, we're also going to be talking about the debt ceiling, what it means, what it's likely to be, and what impact it could have on cryptocurrency, on Bitcoin, and of course the greater economy as a whole. Before we get into it, smash your like button, hit the comment button, and subscribe to the channel. We do daily videos focusing on Bitcoin, talking about the facts, the data, the technical and structural information, news events, and the economy. No BS, no hype, no emotion, pure raw TA. That is the kind of content you are interested in. Join us on Telegram. It is a second link down below. You've got access to charts, updates, analysis, educational posts, news events, videos, information, and so much more, guys, in this channel. I highly recommend joining up. The channel's been around since 2021. We've been here for a long time now. I highly recommend signing up to that. You can also sign up to our VIP channel if you're interested in trading signals, exact entries, exact targets, exact stop losses, such as this XRP long we took at 39 cents. Entries, targets, stop losses, exactly laid out. Not only will you get access to that, you also get access to our group chats. We have 4 individual chats. We go over general chat, trading charts, education, help chat, and our altcoin analysis chat, and so much more, guys. You can find more information about that in the pinned comment in the free channel. Go up and click over here to find more information, including our entire trading track record. And we also do have a surprise announcement coming in 24 hours, so I do want to go ahead and shout that one out. Join up the channel to find out what it is. Let's get into the video, guys, starting off with the market data for the current month. How are we looking currently, guys? For the month, we are down 7.27% in May. We have about 4 or 5 days left. Actually, it ends on the 31st. We have about 3 to 4 days left of the month. It is very, very likely at this rate, we're going to be closing out May red. It's highly unlikely we're going to see a 7.2% rally from here, closing out May green. So we can almost say with a bit of certainty now, we're likely going to see May close out red. The key thing about the monthly close is, can we push the price back above the open price of the prior candle, which is sitting around 28,400. If we can get the price over the open price of the last candle, this monthly candle will not look half as bearish as it currently does. Right now, this is a bearish engulfing candle. If it does close like this, it could signal a potential higher time frame reversal. But of course, as we know, economic news, economic data takes precedent over what the charts are saying. So we'll discuss how this could still be invalidated even if it closes bearish. Moving on, guys, looking at the 24-hour volume, we can see classic weekend price action here, guys. Only 40 billion, down 20%. Liquidations are up 0.7%, sitting around exactly the same, 34 million. Looking at our volatility index on a 60-day, we're sitting at 1.88. Looking at our volatility index on the 30-day, however, we are sitting at 1.51. 1.51 is historically low level sort of volatility index. In fact, if we look back in history, we've only been around 1.51 a handful of times in the last 3.5 years. In fact, it's the third time we've been under 1.6 in the last 3 years. And if we look at exchange data, we can see volume is at all-time lows. Price action is basically at all-time lows, not in terms of the actual price, but in terms of the volatility and volume. And again, this is representing that. So we are seeing volatility drop. If it does continue to drop, we can expect volume to dry out, momentum to dry out. But if we do see the price action start to rebuild momentum, we are going to see a surge in volatility like we saw over here, which could result in a strong move in direction, likely to take us toward 25.2, or even potentially upwards past 30,000. Moving on from there, guys, we can see the liquidations. We are sitting at 36 million. Longs and shorts, again, split between the two. We're around 33% in longs and 66% in short liquidations. Let's go ahead, guys, and discuss the DXY, the debt ceiling, and the broader markets. So the DXY and the broader markets are currently closed. As you can see, the DXY is on a nice uptrend. We broke upwards from over here. We saw a nice move toward the upside from our breakout point. It did result in quite a strong move from around 101 at this double bottom point over here, all the way up to around 104. At the moment, we still do have a target of 105 to 106. That is going to be the next liquidity zone. We do expect a move toward that level at some point. However, we do have an established and developing uptrending support line represented by this horizontal, or should I say diagonal, black arrowed line. This is our current uptrend, our forming uptrend, meaning we do expect the price to eventually reach its target, provided it doesn't fall below this trend line. So expect this target. But if we lose this trend line, then this target is no longer viable. It is no longer what we expect. If we do lose this trend line, expect the price to move back toward this lower liquidity zone, and if retested for a third time, the probability of holding is lower. We're most likely to continue downwards. As you would know, guys, the DXY moves upwards on the higher time frames. We do expect stocks and crypto to fall. If the DXY starts to move down on the higher time frames, we expect stocks and crypto to rally. Exact opposite, guys. They are inversely correlated to a degree of 70%. Again, we have explained exactly how all of that works in terms of economic data, in terms of market models, and in terms of risk models in accordance to interest rates and in accordance to CPI. We've talked all about it over here. If you want to find out more information about this stuff here, if it looks like gibberish, if you're not too sure about what it means, go check out our previous video. We discussed all of it. Anyway, let's go ahead and get into the stock market. We can see the S&P 500 has actually pushed back into this major resistance zone, yet to break through. We do need a weekly candle close above here to show strength. If we do not get a weekly candle close, we're not going to be seeing the strength we need, and it can still act as a rejection point. If we do get a weekly candle close, we do expect a continuation up to our next resistance zone, sitting around 4,300, around 4,300 to 4,350. Now, this, of course, is going to be our local top, and of course, liquidity zone as represented by these two rejections over here. If we do not see that, we do expect a move eventually back toward this uptrending support level. Again, this is a rising channel formation, which if it does break, we do expect a move toward the downside. But if we do break down here, expect a move towards this liquidity zone over here, this chunk of support, sitting around $4,000. If we lose that, potentially even lower. Right now, it is looking neutral. It is not looking bullish. It is not looking bearish. It is looking neutral. Looking at the Dow Jones, we did see deviation below our uptrending support level over here. We have seen a nice daily candle bounce. It'll be very interesting to see what happens, guys, over the next week with the Dow Jones. Exactly the same thing occurs over here. We are looking for a weekly candle close below this trend line to confirm the breakdown. At the moment, we have not seen that. We have not even seen the weekly candle close. We are currently only seeing that wick. This is the daily chart. And for the break upwards, we also need a weekly candle close here. So the weekly candle closes are going to confirm the directions. Until then, we are just consolidating between our resistances and our supports. Okay, let's go ahead and talk about the debt ceiling announcement, how it could potentially impact cryptocurrency, how it could potentially impact the broader markets, and then we'll get into the rest of the video. I'm just trying to fix up my light. I think that might be a little bit better. Okay. So the debt ceiling announcement is coming expectedly on the 2nd of June. And I want to bring up the Bitcoin chart on the macro really quickly, and we'll discuss this in just a moment, and we'll get into the rest of Bitcoin. As you would know, the debt ceiling announcement is actually one of the bigger events going at the moment. And if you think about this, the debt ceiling limit is essentially the max amount of money the US government is allowed to borrow. And as you know, if you have more money you can borrow, you can use more money, you can spend more money, the economy gets stronger. But with more borrowing and more printing, the US dollar loses value, okay? The way I like to explain it in a simple term is imagine you have a credit card. On your credit card, you have a credit card limit, say it's 2,000, say it's 10,000, 100,000, whatever it is. That credit card limit is the max amount you can borrow, and with that borrowed amount, that limit, you can spend up to that point. You can use it to invest, you can use it to whatever you want, pay off whatever you want, it doesn't matter, you have a limit. What the government is doing is they're asking to increase that limit. So if they increase that limit, they'll get access to spending more money, which they will spend more money, they'll get access to print more money. What happens if they spend more money? Inflation goes up. What happens if inflation goes up? Asset prices also rise. So we do see the debt ceiling limit actually rise. We can expect this to be a favorable event for assets or risk assets or house prices, for cryptocurrency, for the stock market. We are going to see these asset prices rise, as if they are able to take more money, they are able to borrow more money, they're able to print more money, create more money. Guess what happens? That money eventually goes into these assets and asset prices rise in conjunction with the fact that US dollar devalues as more debt is acquired. Okay, so that being said, guys, the debt ceiling announcement is happening on the 2nd of June. We do have a few days until then, and we do expect the price and the market to be quite volatile, sporadic, and indecisive until that occurs. It's something we do have to consider, and it's something we'll be discussing in our Bitcoin analysis today as well. So keep that in mind. Debt ceiling announcement comes out positive for the markets, that is going to be bearish for the dollar. The dollar is not going to be very happy, and the asset prices should continue upwards. But there's a lot more to it, guys. One of the main things is the interest rates and obviously rising inflation. At the moment, we have just seen a few bits more of economic data, such as employment rate, income, and what was the last one, and PCE, all those actually suggesting that inflation is back on the rise. Prior to that, we had month-on-month inflation data rise, we had PPI rise, and we had NFP rise. So in the last 4 weeks, we have seen a whole bunch of data suggesting inflation is rising again. If inflation starts to rise again, they need to lift interest rates again to account for that inflation. But how can they do that when they're increasing a debt limit? It's counterproductive, it's counterintuitive, it's almost contradictory. So what's going to happen if they increase the debt limit? They're basically cutting off the leg to save the arm for the short term. They're kicking the can down the road. They're making taxpayers suffer. With that being said, inflation will come back and bite us in the ass. Prices will start rising again, assets will start rising again, the gap between the lower and middle class will start expanding again, and we're going to see the entire cycle repeat like nothing ever happened. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So prepare for it. It's very interesting stuff. It's also very scary stuff for a lot of people, but we'll keep you updated on the channel. Let's go ahead, guys, and get into Bitcoin. So I want to keep today's video short and sharp in relation to Bitcoin because we have seen, we've seen a lot happen in the last 24 hours, but at the same time, we haven't really seen too much happen, right? What we did see was a strong bounce from our 26,000 to 25.8K level. This, of course, is represented by our green support, and we label it green because it's significant, right? This is a strong bounce zone, but bounce zones also represent areas of liquidity and, most importantly, areas of major support. So if we do lose this level, we're actually going to be entering this low volume range, and I represent it by a low volume range as our VRPV significantly drops off towards our POC, which is sitting at 24.6 thousand. So if we do lose this level, we are going to see the prices fall to 24.6, which is sitting between the 25.2 and 24.4 major horizontal support. You can see on this chart over here, the 25.2 to 24.4, major horizontal support is a 300 plus day long support represented by two major points of resistance and a breakout right over here. So we do lose that lower level, 26 to 25.8. We can expect a move toward this level. Now, additionally, not only is this a major horizontal short-term support on this chart, if we go to the weekly chart, it is actually represented by, if we delete some of these indicators over here, it is also represented by the 200-day moving average, and we'll go ahead and change the visibility. Let's go ahead and make this a little bit more clear. The 200-day moving average is represented by this yellow line. You can see on the weekly chart, we bounced on the 200 and the 50 EMA just below it, okay? So we do have the 50 EMA sitting at 25,800, and we have the 200 moving average sitting just above 26,000. So if 26,000 to 25.8K is lost, we are not only losing that short-term support here, which will result in a move down, we are actually also losing the weekly uptrend, right? We've been in a weekly uptrend ever since we broke the 200. In conjunction with breaking the 200, it occurred at this point here. At the same time, we broke out of this major resistance. We've been in a weekly uptrend ever since. We've been in a daily uptrend ever since we broke out over here. Daily uptrend, weekly uptrend, macro uptrend occurs over 30,000. We got rejected over here. We are now in a weak bearish trend. As you can see, we have moved from $28,000 down. Therefore, we're in a weak bearish trend moving downwards into major support. If we lose 25.2 to 24.4, we enter a bearish trend, as not only the short-term horizontal support will have been lost, but the weekly uptrend, according to the higher time frames, will have also been lost. So this level over here is incredibly significant. So obviously, as you know already, by the start of this video, you can see we're kind of talking about a bearish perspective. We're going to talk about the bearish perspective first. We'll discuss now what we need to see for the price to actually come back towards that level, to retest that level, and to potentially break down from that level. Then when we finish out, we'll discuss what we need to see for the bulls to take control. So let's talk about it, guys. As we can see right now, we are currently in a horizontal consolidation. This horizontal consolidation has a few ranges, and number one, the range is this larger range here. If we go ahead and drag, this horizontal consolidation downwards, we have this higher time frame horizontal consolidation right over here. In here, we have a few ranges of liquidity and support, and I actually want to bring this one back down to where it should be. There it is. Okay, so we've had deviation below a horizontal range. We've had massive rejections from the upper range. We've had support from the lower range, and of course, this was in fact deviation over the weekend, a bit of price manipulation towards that liquidity zone to grab this liquidity before pushing the price back upwards. So what we are seeing now, for the bulls to take control, we need to see the price break above here. We'll discuss that in a second. For the bears to push the price back down and to back down potentially under 25.2, we need to see the price break back under 26.5. This horizontal level here. As you can see, this area has provided some massive support in the history of Bitcoin in the last 2 weeks. Every single time we lose that level, we see a liquidity dump towards our next major support. Moving towards this support puts us into potential, or gives us the possibility of retesting this level. If we retest this level again, we will definitely not be holding it, we'll be falling through it. So for the bears to take control, we need to move back towards 26.5. We need to lose 26.5 to take us back towards this level. So let's talk about the short term. How could we see that occur in the short term? And I just want to go ahead and point out before we get into that, if we look at the current range, this is a neutral range. Within the neutral range, we have two zones. We have a bullish and a bearish zone. The bullish zone represented by the plus sign, the bearish zone represented by the minus sign. The bullish zone being the area of which we are above the POC, the bearish zone being under the POC. The POC represents the highest area of resistance within this visible range. Therefore, technically, we are actually above midline support. We have the POC on our side. We do have this uptrend developing, which will give us a potential to come up and retest this resistance level. Okay, we do have to keep that in mind. So let's jump into the short term and discuss what structures we are seeing and the potential for a breakdown. So as you can see, guys, we do have rising momentum, we have rising price action, but what we can see as well is we do have this uptrend over here. So we know we have an established uptrend developed. I'll go ahead and draw an arrow in. If we see a break of this uptrend, that will facilitate a move towards this level. As we said, if we lose this level, that will take us lower. This breakdown of this uptrend will be the trigger for a move back toward the downside. Until then, the uptrend is likely going to take us upwards towards this next resistance zone. So we do come up and retest the resistance zone. That is going to be a shorting opportunity. Sorry, I'll go to the trade. A shorting opportunity. I'll wait for the sound to pass. A shorting okay. Wait for it to pass. I think that should be good. A shorting opportunity at 27,400 with stop losses above this level, okay? That is going to be the next move. If we do break this level, we can look for early shorts below this uptrending support line for a move toward the downside. If we go ahead and copy and paste this trend line across, what we can see is we do have a potential rising channel formation. Where does the upper resistance of the rising channel take us? By no coincidence, it actually lands up around this 27,300 to 27,400 level, which puts us in that upper rejection zone. So according to the short-term price action, according to the momentum on the smaller time frame, according to our support levels and our structural levels, we wouldn't be surprised to see a move upwards, and I'd be expecting a move upwards to retest this zone unless we get that breakdown first. So if we get the breakdown, expect to move toward the downside. Until then, expect the price to continue upwards to 27,400. Okay, let's talk about how the bulls can take back control and push the price back over 30,000, potentially to 30,000. Same thing, guys. We are starting from this range. For the price to flip bullish again, we need to see two particular things. Number one, we need to see a break over this uptrending diagonal line. This is our uptrending diagonal line of this prior chunk of price action, okay? When we saw a breakdown, we saw a strong move toward the downside. We've been consolidating sideways ever since. So we have 2 points of interest. Number one, the uptrending diagonal line, and number two, this red line over here. Now, the red line is represented by the POC. The POC being point of control area of largest resistance. Look where it is. It is by no coincidence when we account for the entire visible range. It is no coincidence the POC was sitting right in between the resistance range over here. So we know for the bulls to take control and push the price back upwards to retest this uptrending diagonal, we need to see a break over this horizontal resistance range, which is going to be 27,400. This as well is going to be a rejection point and an opportunity to short from if the price reaches it. So looking for a retest of that point, a break out of that point for a continuation to 28. If we break over $28,000, that is when the bulls start reclaiming control. And that is when the bulls start to gain momentum again and have the potential to push the price upwards. As you can see, our downtrending resistance over here converges with that resistance zone, this horizontal resistance zone, this diagonal uptrending zone, and our 28K level. If we do break above that, we clear this entire chunk of support, we move into this lower volume resistance range, we can push the price back upwards. Until then, we are definitely in a neutral pattern. Watch the trigger points. The two main key levels you're watching on the high time frames is this upper resistance and this lower resistance. On the smaller time frame, the two key levels you're watching is going to be the uptrending diagonal level here, and of course the upper diagonal resistance when we drag this upwards and across. Those are the two key levels you're looking for. So 27,400 and of course 26,700, or that diagonal, whatever is retested. Now, if we zoom out, if Bitcoin is able to break over 27,000, break over 28,000, push into that level, we would alternatively as well be breaking back into the 28 to 30,000 yearly long resistance. If we do that, not only do we have a potential to close a monthly candle above the open price of the prior candle, but it gives us a shot to retest $30,000 again, as this is going to be the Gaussian channel midline, and it is going to be the RSI breakthrough point representing a shift in momentum. So a break over 28,000 represents a shift in positive momentum. It will represent this area as deviation. Weakness has been faded and the price can push back over 30,000, potentially continue in a macro bullish uptrend. Thanks for watching, guys. I hope you enjoyed today's video. If you've got any questions, leave them down below. Sign up to a crypto academy. You can find all information over here. In the link, we have 120 students. You'll find what we go over, what we teach you, and you'll find again absolutely everything you need in here if you're a new trader inexperienced or just started out in the cryptocurrency market when it comes to day trading, when it comes to investing, when it comes to swing trading, everything you need to understand TA and risk management is in this course. You can go ahead and contact us via email to find more information. Thanks for watching. See you guys tomorrow.